Hi students, Namaskaram. Now we are entering into 12th practical problem under the heading income from house property. Mr. A has 4 houses, the municipal valuation which are rupees 10,000, rupees 8,000, 6,000 and 6,000 respectively. He lives in the first house, the second house he runs his business, 2/3 of this third house is let out for rupees 400 per month and the remaining portion was self-occupied. A loan was taken on 1st April 2014 for the construction of the fourth house. The construction which began on 1st May 2014 and ended on 31st January 2017. The house was let out on 1st February 2017 at rupees 600 per month. For the previous year 2019-20, the interest paid by him in respect of the loan amounted to rupees 800 and for the previous years 2014-15 and 2015-16, the interest paid has been rupees 1,500 and rupees 1,400 respectively. Municipal taxes were assessed and paid at 10% of the municipal valuation as certain income for house property. Here, assessee has 4 houses. We have to find the income for house property of 4 houses separately. He lives in the first house. It means the first house is self-occupied. We know the net annual value of the first house self-occupied is nil. From net annual value, we avail the deduction in respect of interest on loan. In this problem, for first house, there is no loan, there is no interest, nil. Income from house property of first house, nil. In the second house, he runs his business. According to section 22, if the assessee utilizes his own building for his business or profession, it is not covered under income from house property. If an assessee is using his property for his business or profession, such property is not covered under income from house property. Therefore, there is no need of taking second house for the computation of income from house property. Then consider the third house. 2/3 of third house is let out for rupees 400 per month and the remaining portion, that is 1/3, was self-occupied. Here the first house is assessed to tax as it is self-occupied and its annual value is taken as nil. Therefore, the assess is not availed the exemption to this 1/3 portion as self-occupied. Therefore, this 1/3 portion of the third house is to be treated as let out. Means it is assessed tax as deemed to be let out house. ഇവിടെ ഒന്നാമത്തെ ഹൗസ് സെൽഫ് ഓക്യുപ്പൈഡ് നമ്മൾ അസസ് ചെയ്തു, അതിന് നെറ്റ് ആനുവൽ വാല്യൂ നില്ലായിട്ട് എടുത്തു. ഇനി ഈ തേർഡ് ഹൗസിന്റെ 1/3 സെൽഫ് ഓക്യുപ്പൈഡ് ആയിട്ട് എടുക്കാൻ പറ്റത്തില്ല. ഇറ്റ് കാനോട്ട് ബി ട്രീറ്റഡ് ആസ് സെൽഫ് ഓക്യുപ്പൈഡ്. പക്ഷേ ഇത് വാടകയ്ക്ക് കൊടുത്തിട്ട് കണക്കാക്കി ടാക്സ് അടയ്ക്കണം. ഈ 2/3 പോർഷൻ ലെറ്റ് ഔട്ടും 1/3 പോർഷൻ ഡീംഡ് ടു ബി ലെറ്റ് ഔട്ട് ആയിട്ട് കൺസിഡർ ചെയ്യണം. 2/3 പോർഷൻ ഓഫ് ദി തേർഡ് ഹൗസ് ഈസ് ലെറ്റ് ഔട്ട് ആൻഡ് 1/3 പോർഷൻ ഓഫ് ദി തേർഡ് ഹൗസ് ഈസ് ട്രീറ്റഡ് ആസ് ഇറ്റ് ഈസ് ലെറ്റ് ഔട്ട്, ഡീംഡ് ടു ബി ലെറ്റ് ഔട്ട്. Third house, 2/3 let out, 1/3 self-occupied. Gross annual value. First we have to compute expected rental value. We have municipal valuation of 6,000. There is no fair rental value, there is no standard rental. Therefore, this municipal value 6,000 is the expected rental value. B. Actual rental. 2/3 of the house is let out for rupees 400 per month. 412, 4,800. Which is higher? 6,000 is the gross annual value of the third house. From this gross annual value, deduct municipal tax paid. Municipal taxes were assessed and paid at 10% of the municipal valuation. The municipal value of the third house is rupees 6,000. Therefore, 6,000 into 10%. municipal tax paid being rupees 600. Next, unrealized rent. In this problem there is no unrealized rent. Now we get net annual value 5400. Less deductions under section 24(1). First, 30% of the net annual value as standard deduction in respect of repairs and collection charges. 5400 into 30%, 1620. Next, interest on loan. To third house, there is no interest on loan. We get income from house property 3780. That is income from house property of third house 3780. Fourth house. The house was let out on 1st February 2017 at rupees 600 per month. Fourth house was fully let out. We have to compute gross annual value. First, A was expected rental value. For computing expected rental value, we have municipal valuation rupees 6000. There is no fair rental value, no standard rental. Therefore, municipal value rupees 6000 is the expected rental value. Because actual rental. The house was let out on 1st February at 600 per month. Therefore, actual rent is 612, 7200. Which is higher? 7200 is the gross annual value. From gross annual value, deduct municipal tax paid. Here it is given municipal tax were assessed and paid at 10% of the municipalization. The municipal value of the fourth house is rupees 6000. Therefore, municipal tax paid being 6000 into 10%, 600. There is no unrealized rent. Now we get net annual value 6600. From this net annual value, less various deductions under section 24(1). First, 30% of the net annual value as standard deduction in respect of repairs and collection charges. 6600 into 30%, 1980. Second, interest on loan. We have some information about interest on loan. A loan was taken on 1st April 2014 for the construction of the fourth house. The construction of which began on 1st May 2014 and ended on 31st January 2017. Here we have to note two dates. First date of taking loan, 1st April 2014. Second, date of construction completed, 31st January 2017. There was loan before the construction completed. Therefore, there is interest prior to construction or pre-construction interest. We know the interest up to the previous year in which construction was completed. It is interest prior to construction. The construction was completed on January 2017, that is previous year 2016-17. The interest before the previous year 2016-17, it is the interest prior to construction. Construction complete ചെയ്ത ജാനുവരി 2017 മുൻപ് ലോൺ എടുത്തിട്ടുണ്ട്. അതുകൊണ്ട് ഇവിടെ ഇൻട്രസ്റ്റ് പ്രയർ ടു കൺസ്ട്രക്ഷൻ ഉണ്ട്. കൺസ്ട്രക്ഷൻ കംപ്ലീറ്റ് ചെയ്തത് ജാനുവരി 2017, പ്രീവിയസ് ഇയർ 2016-17. 2016-17 മുൻപുള്ള വർഷങ്ങളിലെ പലിശയാണ് ഇൻട്രസ്റ്റ് പ്രയർ ടു കൺസ്ട്രക്ഷൻ. ദാറ്റ് ഈസ് ഇൻട്രസ്റ്റ് ഓൺ ലോൺ up to the 31st March just preceding the date of construction completed. The interest up to 31st March 2016, it is the interest prior to construction. And the interest on loan include interest for the previous year. We are directly given for the previous year 2019-20, the interest paid by him in respect of the loan amount rupees 800. Therefore, interest for the previous year is rupees 800. Okay? Interest for the previous year rupees 800. Then pre-construction interest. We are directly given interest for 2014-15 and 2015-16. These previous years are the previous years before the previous year in which construction was completed. കൺസ്ട്രക്ഷൻ കംപ്ലീറ്റ് ചെയ്ത 2016-17 മുൻപുള്ള 2 വർഷങ്ങൾ, 2014-15, 2015-16. The interest being rupees 1,500 and rupees 1,400. Total 2,900. It is the pre-constitution interest. We get 1/5 of 2,900 because interest prior to constitution is allowed as a deduction in 5 equal annual installments. 2,900 into 1/5, 580, add them, we get 1,380 is the interest on loan of the fourth house. Interest on loan 1,380, deduct these two items from net and value, we get income for house property of fourth house 3,240. Then compute income for house property for the year 2019-20. First row self-occupied, answer nil. Third row 2/3 let and 1/3 self-occupied. We got answer 3,780. 3,780. Fourth house fully let out. The answer is 3,240. 3,240. Add, we get 7,020. It is the income from house property of Mr. A for the assessment year 2020-21. So thank you.